And Joe, in your observations and analysis of how the equity markets trade and perform, have you found any actual evidence that this form of trading or this form of volume may affect actual moves in market indices?
To pin it down and prove something is very difficult. What you feel as a trader is one thing. So, when we wrote we wrote a white paper 6 months ago and it started getting published. That was our observations on what we see during the day and how we feel trading is going on. We wanted to let our institutional clients know what was going on.
What was the response to that 6 months ago?
The clients loved it. They were like, keep up the good work. We know you guys are doing a good job. We know you got our back. That's why we deal with you guys over there, right? As opposed to somebody who maybe not pay attention to their orders as much. So they wanted us to continue. Somehow the paper started going around the internet, and next thing I know, we're in the middle of this firestorm here. So I'm not a researcher. I don't look through all fields of data. There are certainly events that you can look at to see if what's happening. The March sell-off back in March, which was by all estimates overdone, and most people agree we sold off too quickly. Why did that happen? Where did the liquidity go when we had a few external market events? Where did the buyers go? It was just too fast of a downtrend for a guy like me to say, wow, what's going on? Just like now, we're going up 11% in the last 2 weeks in the U.S. markets. Why is that? Is it a short squeeze? What happens at the end of the day? Do the futures market have anything to do with it? I have a ton of questions. Do I have answers? No. I'm an observer of markets. I don't pretend to be a researcher. I don't pretend to be somebody with all the answers. We want to lay it out there for the people to decide. We welcome the debate. We encourage it, and we don't want to be so seen as you're on one side, we're on the other. We're not. My partners and I are laying out the issues, and we expect everyone else to do their research and their homework.
And have you been contacted by regulators to talk about these issues?
Not yet. I wouldn't be surprised if one day my phone would ring and I'd be more than happy to tell them what we observe. Again, I don't necessarily know I have any information that everybody else doesn't have. I don't have information that you don't see. If you sat at my desk for the trading hours that I sit there, you would see what I see. And you'd say, okay, that's pretty obvious, Joe. There's nothing big there. And that's all this is it's an observation, and we just want to make sure that the level playing field is out there for everyone to have.
But from your perspective, this is something that kind of threatens the integrity, if you like, of the equity markets? Or how would you characterize its importance?
It does. When 70% of the volume is controlled by one subset of investor class, you do have to be careful. If 70% of the copper in the world was bought by one person, wouldn't we be concerned about a corner of the market? You're kind of in the same situation. When everybody is following the same strategy, you do need to be concerned as to what are the ramifications if that 70% disappears. And there was an article in the op-ed in the New York Times today comparing this situation to the portfolio insurance situation in 1987. Everybody thought you were safe, and in the end, they all ran to that. Everybody did the same thing. They had the same strategies. And now it's similar in that we have, according to this op-ed, which we agree with, the strategies are very similar. Everyone's doing the same thing. Well, what happens if it doesn't work one day?
So you're particularly concerned that what happens if, for some reason, all these strategies get cancelled, the computers stop trading, essentially, and then what happens to the market? Does it collapse?
Well, here's the perfect thing. The computers have no requirements to trade. They have no obligation to supply liquidity. They have no obligation for a time period. They're just not market makers and specialists. Fine. Okay, if a world event were to happen overnight, whether it be economic or geopolitical, and everyone saw a gap down in the morning, do you think the buyers that were there today would show up tomorrow if 70% of them were just traders flipping in and out? I'd kind of bet no, which means that if I'm trying to exit a position, a large position of a stock that I thought traded 10 million shares, now trades 3 million shares, you're going to have a problem selling that stock. So the door, which you thought was pretty wide, has now shrunk considerably, and everyone would run for the same exit, which, again, if we look back in March, we should take a look at that and see, well, was this the situation? I don't know.
Thank you very much.
My pleasure. Thanks for having me.